Hello, traders. Whew, it is the 11th of August today. It is Tuesday at 8:04 a.m. Chicago time. I apologize for the delay in getting started. Some last minute tweaks here. This is episode number 1816. Thanks for joining me. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, we are popping higher as the market allocates to risk yet again. I mean, is there anything else? Um, and we are opening in a gap in the equities, specifically the S&P. The NQ this morning is actually weaker as it was yesterday. The NQ seems to have run way ahead of everything else and is now tired. The Euro Stoxx 50 leading up 2.71%. Big gain there due to a lot of it due to the zoo economic sentiment, the DAX and the Euro Stoxx responding. The zoo economic sentiment for the EU as well as as well as Germany were relatively strong. Consensus was 58, came in at 59.3 for Germany, forecast 62 for the EU, and came in at 59.6. This morning we did get PPI for the US, came in at negative 0.2%, and we don't have much on the calendar. We have Fed's daily at noon Eastern, and then we have the API crude oil stock change at 4:30 Eastern. I want to make sure you guys know that I am doing an Edge Wisdom segment every week or so. I try to pick off a question that I'm being asked by either through my Twitter feed or via email. Get a lot of emails, appreciate it. And I try to pick the ones that I believe are relevant to the most traders and go over those in what's called an Edge Wisdom segment, sponsored by Edge Clear. So we'll do that here in a minute. But first, we want to go over what we've got for today. No major earnings today. I've already gone over the calendar, so let's jump right in. Take a dive into what was expected yesterday in our review segment. Here's what we were looking for in terms of the action yesterday. So here it is. The primary scenario was for a dip back into the value high, which was 41 value high, and to potentially come back into the overnight value and back into this all-important singles or low volume node before turning back up. I really just was being conservative, was looking for the edge of it, and that was 41. And then I was looking for a push higher into around 60 as a key test area. And to rest up at around 55, 51 being important. 51 is an MC point of control way back from February, and we built our we did build our point of control overnight right on top of it, basically accepting this area. So the expectation is it'll likely test higher and come back into the point of control and hold there. Here's what actually happened. Here's yesterday. Yesterday saw just a tremendous dip here. And where did we dip to? We dipped to the 28-29 area, which is a major stock zone. If you recall, this stock zone has been here for some time, about a week and a half or so. And it came right into it. First, we get a small bounce at the 35-36 stock zone, kind of a carryover from back here. and then push into the 41, got the 40 half, push into the 41 from below as opposed to holding the 41 from above as expected, and then it continues down to 29, 28, and then we have another. Wow, what a miracle! Another V bottom as buyers step right in and take this back up. I did warn Convergent members in real time that the mid setup, and there was a cluster here. There was a mid, there was RTH mid, there was just above there at 46, there was full session mid, full session VWAP, and so on. And I said that if you're going to take a stab short, it has to be a scalp. It cannot be on any higher time frame, and it's likely to push through. And that it did. It came right back up to the opening print, which is this green line at 33.50, consolidated around the 33.50, and I'm finally pushed to 57. Remember, I was looking for 60 as a high, and for it to finish around 55, it finished around 51 or so. So this scenario here was pretty much spot on, except that we dipped way the heck down. We actually tested the full value range of last Friday, value low being right in that 29. The 29 is the low of the single prints area, which was 26. We had single prints at 26, 28, and 29 from last Thursday. Dipped right through the value range and right back across, and has pushed through to the high. And that's what we got in real time. The volume yesterday was in line 984, and some people have called this a flash crash. I think that is a stretch. It is not a flash crash. I was there in the May 2010 flash crash where the S&P went to 666 and bounced back up. And a flash crash that is not as orderly as this was. A flash crash has no bids, no offers, and it just moves fast, 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 fast. This is just a common flush. We've seen this happen a lot over the last 2 months or so. In the recovery, we see it push down and pull back up. Now, the thing that was interesting yesterday, I'm monitoring the FANG stocks, and the FANG stocks yesterday, if you look at how things were set up, you had Facebook, this gray line right here. I need to change the color. You had Facebook kind of holding things up in the morning, but along with Google and Apple, but much of the Fangman stocks were below zero, and the low was right here. The low was put in right here, but there was a lot of pressure to the downside. As soon as the opening swing is done, there was a lot of pressure to the downside, and I was leaning short. I was really looking for the S&P to give it up because the Nasdaq really couldn't hold things up. If you look at the Nasdaq at the open, this is the cash open again. I got to change my pen color. The Nasdaq right from the open was weak. It pushed higher, pushed above the overnight high, could not find any strong bids, and started to rotate over while the S&P was still holding sideways. And at the same time, the Dow and the industrial sector was pushing higher, was really trending higher. So we had this very clear divergence in the underlying sectors, with techs and comm services really taking a beating. Really, it's techs. Comm services were holding up. Google and FB were higher. Techs were very, very weak. And then as soon as the market started to turn over, it really yielded, in my opinion, an opportunity to take a short. And I'd repeated multiple times in the Convergent Head Trader channel, if you are short NQ, hang in there. Hang in there, because it started out at around 1135 or so, and we're looking for 10,990. 10,990, and it went to 10,926, a major stock zone down there. 1090, 10,926, and 10,990 was 70 points above there. And then on the way back, we're looking for 10,990 on the retest. Uh, on the retest, and it held up for a very, very short period of time back here, right in here, and then it came right back in. But we're seeing the same kind of behavior today in the NASDAQ. We're seeing it pushing, attempting the high. It took out yesterday's high and then falling right off. It seems like the participants in the NQ are taking every chance to liquidate on new highs. That product has really pushed higher very, very quickly. So that's what's set up. And then with every push down in this product in the S&P, with every push down, and this is, I've been telling you guys that it's been rough trading lately, and I have no issues saying that. I've been telling you that it's been rough trading because I generally trade impulse pullbacks for continuation, and there have not been good continuations on the sell-off. So what does that look like? What the heck am I talking about? Here's what it does. You have this consolidation. We call that balance. Then you have imbalance. So you have a very exaggerated move to the downside on a sell-off, and then we call that an impulse, right? Usually I signify that with an arrow like this. And then what we're looking for is a consolidation, an ascending wedge or a bear flag, and we're looking for the continuation. Very often, as a trader, I'm not equipped to take the breakout impulse, but I'm looking for the pullback for the continuation. The target is the last low, and then any runners and so on and so forth. And what we have had lately is a market that really does more of this. It just drops and it comes all the way back, almost like it is a news-based move. Drop, come all the way back. This one ended up with a continuation, but only after a major pullback. And then here's last Friday, drop, come all the way back. And then yesterday, drop, come all the way back. It's been doing that for some time, and it's a very costly endeavor when it does that. And notice that once it makes these lows, we see the delta kind of dropping, but then we see the delta push back up. So as this was selling off last Friday, the delta wasn't really moving down that much, and then as soon as it starts to buy, we see a strong positive delta. You can see, what are the predominant bars? If you looked at a cityscape here, these look like high rises, and you'll notice that the blue is quite strong in line with the RTH session, which is this shaded area. This chart really tells the story. We did get some good selling yesterday for once. We got good selling, but then again, we get these skyscrapers on the way up. We get this strong positive delta on the way up. This is really important to observe and to understand that is the market regime we're in. Not only that, but the ES has been so incredibly methodical about balance and imbalance. It really has been, putting balance, shifting value higher, balancing. This was a balance day, then shifting value higher, then balancing in the day session right up here. This is night session only. The orange is night session only, or non-RTH. And then look at us shifting value higher again. So we expect today to spend a lot of time in balance up here. That's the likely action. The overnight session shows a positive delta with positive price. We're opening in a gap, and that's what we have. Coming into the session, 264,000 contracts, looking pretty good. Again, I want to allow time for the Edge Wisdom segment. So let's just jump right in. Actually, what I wanted to have you see is real quick. We got to keep looking and keep an eye on the big picture. And the big picture, remember, these are alternating months. Probably could use better colors here. This is a new month right here, and this is RTH only day by day. And look at these days. We just keep pushing higher and higher and higher and higher and higher. The trend is not over. And one of the things you need to be aware of is that the all-time high is at 33.72 on a contract adjusted basis. So if you look at your continuous contract and you don't have 33.72 as the all-time high from back in February, then your data feed is not equalizing contracts properly. 33.72 is the all-time high, and the overnight high is 33.79. So Globex has already taken out the all-time high in the S&P, and we've pulled back and we are just below it. So be aware that we're opening in a gap and we're opening up against the all-time high. So mission accomplished probably this morning. Mission accomplished as we open up, and you need to be aware that this has taken place. Okay, let's move into. There's nothing on the order flow that I'm wanting to show you today because there isn't anything all that useful. So let's look at what we're expecting for today. So today's session, excuse me, let me clear my throat. Hey, and by the way, you get to see me here in a moment. And the Edge Wisdom, it's an experiment that I'm doing with a live stream. So here's where we are currently, right? We're right in here at the 68 quarter area. This is yesterday's high at 57. You can see my stock zones are the gray areas, the gray bands. These are areas I'm expecting the market to experience some resistance at if above, or some support at if below. You can see that we built the overnight session, built a high volume node, and the overnight VPOC was at 76 and a quarter. Anything above the 72, is a projection, which means it's based on measured moves, and these have been respected. The one above is at 80. We got the 79, and now we're pulling back into the high, the spike high that was put in the overnight session, and we're coming right back to it. So the expectation, again, we're still in a gap. There's a gap down here. Yesterday's high is right here. The expectation is an open auction that balances out. We have overnight inventory is long. Overnight inventory is long, delta is long, so the expectation is for a rebalance. I'm looking for responsive selling towards the 33.57 area, consolidation, potential poke into the range yesterday, a push into 51 or so, the MC point of control, or the VPOC from yesterday, and then I'm expecting an impulse at some point to challenge that 72 up higher. So 72 right in here. I'm looking for it to push up there, and then by the close, I'm looking for a down move by the close. Mission accomplished. We're at new all-time highs. Profit taking is likely to ensue, and I'm expecting the market to bounce out into the downside later on. That's the primary scenario. The secondary scenario is an open that immediately, we're above VWAP, above the full session mid, that immediately pushes the overnight high, squeezes into the 79.80, consolidates, and then falls back into the range, giving us an impulse down. And I'm looking for it to sit here and just consolidate into the overnight range and hold steady here. This is what kind of happened the last time we were up here, and then the following day. What we've been doing when we were making new all-time highs, what we've been doing is we make a new all-time high, then we have a consolidation, and then we sell off in the next day or two. If you go back to November and January, you'll see that that's the case. Those are the two main scenarios. I want to see if it pulls back, How is it treating as price discovers lower, advertises price lower? How does it respond on the way down? Is it well supported or is it not? So let's get into the Edge Wisdom segment. Hello, everyone. Nice to see you face to face here. Let me shrink myself. All right, there we go. So the question for today is many supposed professional traders say that discipline is essential to making progress. For some reason, I know what I need to do, but I can't get myself to do it. Does that sound familiar to anybody? Does that sound familiar to you? What do you tell your traders who can't do what they are supposed to do? There are several things at play here. Your belief system is not on solid footing. That's one of the main issues that we are going to have to deal with here. More work is needed to prove to yourself that what you need to do is actually necessary. If you don't believe that whatever it is you're supposed to be doing as a trader is something that's necessary for you to do, then you're not going to do it, right? An oft ignored area for traders is self-value and self-love. I know it sounds mushy, but listen, you're worth it, right? If you don't believe you're worth it, then you're not going to do what's required. If you truly believe that you deserve success and to progress, then you would simply do what is needed. You're worth solid results regardless of P&L. I'm not talking about P&L. We equate success with P&L, and in trading, that is that's a very difficult thing to keep balanced. So we equate success with perfect execution, perfectly trading. The results just happen, okay? Depending on the market regime and the quality of your edge and so on, really measure yourself on the quality of your trades. So I don't give a trade that made money in A and a trade that lost money in F. I give a trade that was executed properly in A, even if it lost money, even if it was a full stop out. So just remember that you're worth solid results now. You need to do this now. So the central issue here is a belief that tomorrow is when we will do what is required. We don't deserve those results today. This is a false assumption. You're not treating yourself the best you can be. And I'll give you an example. If I went into a room full of traders, 1,000 traders, and I said, I have a program to put you through. And it requires a rigorous process of executing and a lot of exercises and a lot of homework. It's a crucible, and it's like Navy SEALs training. You know, it's like recruitment in Navy SEALs. The goal is to get you to ring the bell because then we want those who will give up to leave in recruitment rather than in the field of battle. So I'm going to put you through a crucible. Who wants in? Probably 70% of the room will raise their hand. They'll go, yes, me. But when these guys are doing it for themselves, they're not, when they're in the room, they believe they're worth it and they're worth putting themselves through that crucible. But when they're doing it for themselves, it's not worth it. It's only worth it when we're doing it for somebody else we believe knows what they're talking about. The fact is, you and your current state are worth it. Get it done now. You're worth it. You're losing time. You're losing time and you're losing opportunity. Your edge is going to get blunted over time. That's a fact. You need to evolve. And so if you have something you need to prove in terms of the market, your edge, and so on, get it done now. Good luck, and hopefully this has helped you achieve or get closer to your goal. Be sure to subscribe to the channel if you're on YouTube. If not, then go to ft71.com/YouTube. Good luck, and I'll catch you tomorrow morning. Take care. Hope you gained something from this session.